And what portion of your entire portfolio are you investing in any one name? Is there a limit or a rule of thumb? How do you do it?
It's basically based on risk. I don't really use a percentage of my account.
Hmm.
My size depends on the chart setup, where my stop's going to be, and how much I'm willing to risk initially. So it's not really a percentage. Percentages to me don't work because I'm so based and focused on the chart setups. So say, I mean, it depends on the price of the stock.
Right.
Depends if I'm playing options. If I'm playing options, I might go a little heavier because it's not as much capital up front, but still my stop's going to be, so if I were to enter here, my stop would be here. But once we start coming down, my stop always goes to break even.
Gotcha.
Because it's honestly the best feeling in the world. You know you're not going to lose any money. And if you're right, you're going to make money.
Right. And what about a two bar that it's a two bar up, but it closes back within the previous bar's range? How do you interpret that? Because it's kind of a conflict. It's a two bar up, but you're closing back towards the previous bar.
Here is a good example on 421. You had a 2 down. So the entry was there,
Mm-hmm.
target 1 there, target 2 there,
Mm-hmm.
and it hit it. Do you see how that?
Yep. So you never take continuation moves. It's always got to be a reversal. That's interesting.
Never. Yes. So, and then two, when it gaps up, when I talk about gaps negating my plays, you also have to remember, like the common stock market saying, gap ups are for selling and gap downs are for buying. And that's, I don't want to say always true because it's not, but it's most of the time is true. If you get a huge gap up and people wake up to profit, like a whole bunch of profit, they're going to take it. So that's going to bring the price down. And if you have a 2 up in the strat, but it begins to turn red, that is conflict. So we know that we would be red on the day. So we want to be looking for short signals during the day because the 2 up did not work. So it's failing. And then if you look, you had a 2 up, and then the next day you had a 2 down. So hold on, we got too many lines. So the entry would be here and your target would be here. And you see how one, or no, that's a bad example. It's a gap as well.
Mm-hmm.
Because we closed here and then we opened here.
Mm-hmm.
Let's say price had opened within the range of the previous day. That's only when you want to take them. You don't want to take them on gaps. Right. Because it gapped down, went down, and then they started buying the dip.
Right.
So that's why gaps negate strat trades. We want the price to trigger through our price.
Right.
So for this particular instance, we want the price to break through 219.89.
Mm-hmm.
Because people have stops here, right? They have stops at lows of day. So if they have a bunch of stops here, we're going to trigger the shorts and then bears are going to hop in. So that's how we get from here to here.